Looks like we're live. Okay. Welcome everyone to our weekly recap. If you've been following the show, I've been out for a couple of weeks, and that's because I just had a baby. But I'm back now. Super excited to be back, going over the week's main news with you guys. And we have YYC Trader, our head of news, and Owen, our amazing staff reporter here at the Defiant. So, yeah, lots going on this week. Uh, to be honest, like I've been kind of keeping track of things, but not like as fully as I usually am. So this will be a chance to really kind of have you guys get me up to speed, as well as our audience. So it should be fun. Um, so to kick things off, we'll be talking about the Ethereum update, the hard fork that will enable ETH withdrawals. So obviously, this has been something that everyone's been looking forward to. There's been a rally in crypto, exciting to see, and this is obviously still being spurred with the Fed actions. And there's NFT related news, NFT royalties. Um, and then we had a story on the roll up wars, this kind of scaling battle, which technology will win. To start, why don't we go with the Ethereum hard fork? Owen, do you want to take that? And let's see. Maybe YYC, you can share your screen. For some reason I'm not able to. You can share the story.
Oh yeah, sure. Just a second.
But Owen, you can go for it.
Thanks, Cami. Yeah, so basically, fairly straightforward, except for the pronunciation of Zhejiang, which I looked it up before we went live, so hopefully I'm not too far off. But basically, that is a testnet which went live on February 1st, and it was done for the purpose of testing. I'm not sure if it was done exclusively for the purpose, but it will include the updates Shanghai and Capella, which will allow people to trigger withdrawals of their Ethereum from the beacon chain. And for those of us who need to be clued in, the beacon chain is the consensus layer, which was launched in December 2020, and it people have had their Ethereum locked in it since then. And this is part of the long transition towards a proof of stake Ethereum, which was pushed forward in a major way with the merge in, I believe that was September. So yeah, I mean, high level, hopefully it goes well. Shanghai, the upgrade which allows the testnet withdrawals isn't live yet. I think it'll be on the 6th or the 7th, but that's as it stands. I mean, so far Ethereum has done, the Ethereum team has done a great job, and we've been able to go through these major changes without a hitch. So this testnet, I mean, if successful, will push us towards actually being able to people get their Ethereum off the beacon chain, which I think is supposed to go live in maybe March. I can check Sam's story, but very soon. So yeah.
Yeah, I believe they're targeting March or April for Shanghai, which is, I mean, great. But we've already seen so many delays from ETH, right? So we just need to wait and see. But since the merge, I mean, things seem to have picked up in terms of development tempo, and like there seems to be a sense of urgency, right? And I'm sure the bear market also kind of put pressure on the team to be like, all right, let's get moving on these upgrades.
Sure. And as our V Fur, our commentator, said, there's a potential for ETH to dump if a lot of Ethereum gets unlocked. So, it's not, for price wise, you might want to watch that. I'm not sure what the discourse is around that.
That's an interesting point. Okay, but I think that should give people, a lot of ease, just seeing how the testnet is working, because there was just like a lot of questions on how long this would take, and how ready Ethereum devs were to actually implement this. So just having the testnet out there should just like ease a lot of those concerns. And yeah, March is just around the corner, so if everything goes to plan, having stakers be able to withdraw ETH should be huge. I mean, people have been waiting for um, over a year, right? Like when was the
2 years, 2 years.
Yeah.
Yeah,
I
yeah.
mean, for those who started staking right when the beacon chain was launched, it's been a long wait. So
Yeah.
good to see that's around the corner.
And just another point from, I'm sorry if I'm butchering your name, but V for saying that, I think YYC you said this, that there's a queue, right? You can't unstake all at once. So there isn't like a major increase of supply that's going to happen.
Right.
Yeah, and another thing kind of to keep an eye on is that most people who staked are sitting underwater at the moment, right? So they don't really have an incentive to dump, given that they're sitting on unrealized losses. So, I mean, let's see. That's just like an anecdotal data point, but
sure. Well, and they're going to be long-term believers, right? I mean, the people who are staking in the beacon chain aren't going to be necessarily the same people who are kind of speculating on day-to-day price swings. So
that's true. I mean, when people first staked in the beacon chain, no one knew when Shanghai would happen, right? It was like total uncertainty. Like you were sending your ETH into the void and be like, all right, I trust the team and Vitalik to like give it back to me at some point.
Yeah.
Right. So
So
I think you made a good point.
Yeah.
I'm sure, and that's especially true for people who stake directly into the beacon chain and didn't wait for things like Lido and whatnot that let you access your liquidity even though you've staked, right? And yeah, that's something that we should mention as well, that liquid staking tokens have just been on a tear this month. Ever since a kind of firm-ish date was set for Shanghai, I think that's one of the main factors driving that, because once withdrawals are enabled, of course, it'll be a lot easier to maintain peg between the LSD tokens like staked ETH, Rocket Pool ETH, and etc., and regular ETH, right? Because the arbitrage circle will be complete, and everything should be good in terms of reducing risk for LSDs.
Yeah.
That's interesting. So the gap between liquid staking tokens and ETH has narrowed, I guess, or is it close to one now?
Pretty close. They're all like 99 cents on the dollar or around thereabouts.
Yeah.
Yeah.
But it was less.
Cry from June of last year, right? When we had all the 3 arrows and Celsius dumping and all that, and people are like, "No, don't touch stake ETH." But then the smart money obviously just picked it up at a discount and said, "All right, this is
it'll get to par at some point."
Yeah.
Yeah, that was a good bet.
Yeah.
Should we move on to?
That, I think.
Sorry.
I think we did a story on that.
Yeah,
saying,
we covered that. Yeah. So for those of you watching, if you had seen that story, maybe you would have made a good trade there. So yeah, we should maybe switch gears to markets right now that we're on that topic. And yeah, it's been a good few days for crypto. Seems like at least there's no bad news coming out of the Fed. Just the Fed keeping on track with its rate hike schedule. I think there was also commentary saying that it's seeing that inflation is slowing, so that gives some optimism that at least there won't be some unexpected rate hikes. So yeah, what do you think, YYC? Is that right?
Yes, I think so. So before the rate decision on Wednesday, Fed fund futures showed a 98% probability of a 25 basis point hike. So that's pretty much unanimous. And uh, I think the key takeaway from this press conference and the Fed decision was that for the first time in over a year, or like since the rate hike cycle started, the Fed wasn't more hawkish than the market expected. So they did what, even though the hike was in line, the previous during the previous press conferences, he always said, inflation is still, our main concern. We need to do as much as we can, and aggressive tightening is warranted, etc., etc. Which is why we saw the markets sell off usually after each rate hike, and then of course we saw them recover, and then it was just a bunch of chop, right, going into the end of 22. But this time, they actually added language talking about inflation softening or cooling down and stuff like that. So I think that's why the markets responded so positively. And we didn't see much of a dip. There was a tiny dip, which we always see the kind of volatility around the Fed decision. But and it was up and away for most of crypto.
Yeah.
So we had ETH hit across 1700 for the first time since September last year. And Bitcoin at 24K, again, a 5-month high.
Yeah.
So, of course, they didn't stay up there long. It was like a brief little spike and a pullback, which is, I mean, to be expected, I think, because let's not forget we've had a whole year of bear market, right? There are a lot of bag holders waiting to sell when we get to a decent price, right? And 1700 was a key level throughout the bull market as well. I don't know if you guys remember, but we bounced off it a bunch of times, like 5 or 6 times on our way to like 4K and beyond. So, I think that's a key level that's going to be hard to push through on the first attempt. But let's see what happens. And yesterday, I was planning to write a story, but couldn't get around to it about these alt layer ones and layer twos that have just gone crazy. This week, for example. So we had Canto, which is the talk of crypto Twitter at the moment. I'm sure you guys have seen those Canto long necks, which are the NFTs on the chain. So it's just another L1.
Sorry. Okay, I definitely missed this. So what's the long necks?
So Canto is this layer one chain that's experimenting with free transactions. So you don't pay to transact on the chain.
Oh, wow.
Right. I mean, we've been discussing this in print for a while. I think before when it was at 8 cents or so, I pointed out to these guys that, like people have been quietly farming this thing for months. Right. And suddenly now I'm seeing mentions on Twitter. Like, so people are like starting to shill the bags. And
I'm cracking up at this guy saying can't believe it in the comments. Good one.
Yeah, so from 8 cents we're sitting at 56 cents in a matter of a month.
Jeez.
Or so. It's been quite a crazy move. So up
and so
500% in January.
And the long necks is just like an NFT collection.
Yes, so I think it's like the main NFT collection, or the first one that launched. I'm not too familiar because I didn't, even though I should have, I didn't, I was too lazy to bridge and actually do anything on Canto. Regretting it now, obviously. But yeah, so these long necks were like $7 a pop when they launched a couple of months ago. And now the floor is like $3,500.
Right.
Yeah,
okay, so the same guy who said Canto believe it says you actually do pay transaction fees in Canto. So I don't know, was that kind of an experiment? But the main for main transactions you do pay. I don't know.
I'm not too sure about that, because I did see a post about Variant investing in Canto, right? We did a story on that. And in that, they said that it was a new experiment in economics, whatnot. Again, I haven't used the chain, so I might be wrong regarding the exact mechanics.
Okay.
I guess it makes sense to not have free transactions, because then bots would kind of take over the chain, right? Like they did on Aurora when they offered gasless transactions when they first launched.
Fair.
Free public infrastructure. All right. Okay. So I guess that's the main point.
Okay. Some projects can do that.
Thanks for the insights.
Yeah, this is awesome. Okay, so you were saying that the alt layer ones were really on a tear, like Kanto and others.
Yes. So Optimism, of course, hit an all-time high. It's above $3 for the first time. It's trading at 3.15 right now. So it's another one that's seen a crazy move, up 228% in the last 30 days.
Wow.
And this last bout of price action was spurred on by an announcement from the Optimism Foundation regarding an upgrade to the network called Bedrock. So Bedrock is touted to be, I mean, it's like the next big thing, apparently. Right. So, but let's see. I mean, announcements are great, but let's see how the execution plays out. If people still use the chain and the apps on it. Optimism has been popular, no doubt, but activity did drop off a cliff last week after the incentives program ended. Right, so we have kind of a disconnect here where activity is down but token price is up. So one of them is wrong, right? So they'll have to catch up to the other.
Right. Yeah.
I mean, I like Optimism as a project. I think their whole community governance, the houses and all that is like an interesting approach. So I hope Bedrock does what they claim it does and they're able to roll it out. It'll be exciting.
Yeah, I was at, like, in my early crypto days, I was at a conference. I was just happened to be in the same room as Carl Florsch, who's on that team, and he was a very animated guy. So I have, and he works on Optimism. So I'm interested to see how they do.
Yeah, the whole Optimism team is awesome. I think Ying is amazing too, and it's great to see kind of a female founder of such an important project as well. She was one of the first interviewees on the Defiant podcast. Maybe we can have her back, especially after
Yeah, they're hard to. I've had trouble getting a hold of the Optimism team, so you gotta pull some strings, Cami.
Yeah. Okay. If you're listening, guys, we'd love to have you back on the podcast. Okay, and then like the reason why all these alt layer ones and scaling solutions are up is just, I guess, they have just higher volatility than the bigger
I mean,
cryptos, right?
everything
Like
is up
Bitcoin
this month, right? Pretty much, you'd be hard pressed to find an asset that's down, unless it was like rugged or something. But so it's been an up only situation in January.
Do you think that's like, I mean, I guess too early to say whether we're seeing kind of the end of last year's bear market, or do you think that this is just like this one-off reaction to the Fed meeting, or is it like a trend that we'll continue seeing, just a general recovery?
I mean, that's the $1 million question, isn't it? Personally, I think I like to trade level to level. So currently we're in like this bullish posture. So we keep following the trend as long as it runs, and then reposition to the short side when things start to fall apart again. I think the bottom is in. Like November was like the FTX low was kind of a retest, and we didn't really break down further than the June lows, right? So that's a constructive technical pattern. But again, macro conditions are just unpredictable. You never know what happens. And as we've seen, crypto is at the mercy of, it's been so correlated to equity markets that it's at the mercy of the US dollar, basically. The dollar goes up, we crash. Dollar goes down, and it's good times for crypto again. So just to put that in context, the dollar index has crashed from 113 to 101 this month. So that's a huge move for like major world currencies, right? So
just building on that.
This run.
Sorry, just building on that. Yeah, I think the Nasdaq popped like, it was like 3% or something yesterday as well, just as an FYI to build on YYC's point that we're still pretty correlated to crypto or to traditional equities.
Yeah, makes sense. So I guess like we'll have to wait and see what happens with macro markets, because that's what's moving crypto at the time.
Yeah, there was an interesting thread from Kelvin Ko, who is the partner and CIO at Spartan Capital. So he's been a bull since November, right? So he tweeted out saying, like, just like bulls were late to realize like the bottom in December 2020, they're going to be late to realize the bottom of December 2022, right? So, and I think we quoted him in this story. Let me just see what he said exactly. Yeah, so he said that with inflation cooling down, basically based on the data, they believe that the macro and Fed would be less of a factor for crypto markets going forward, at least for some time. And I think that's the general consensus. Not that we're going to see an actual decoupling of crypto from away from all other assets, because I think we're still a ways off from that. Like, crypto as a whole is such a tiny asset class in terms of global markets. Where, like, what is $1 trillion when compared to the bond markets or the equity markets globally, right? But yeah, I agree with him. I think as long as macro stays somewhat calm, crypto is free to kind of write its own story. So, like, projects which have been building during the bear market and now choose to announce upgrades and things like that, I think those will outperform. Those that went into hibernation will just, be riding the coattails of the bull run, but won't really do much. So I think we'll see kind of a disconnect between like teams that actually are worth supporting versus all the random garbage that raised funding in 2021.
That's interesting.
Nice. Oh, and I love this comment for you, Owen. Did you see it from one of our listeners?
Oh man, thanks, Safe TM.
Yay!
Hey, shout out. That's great. That's great to hear.
Yeah.
Made my day.
Love it. Yeah, we love great feedback like this guy. So
wait, I need that. I swear to God.
Feel free to drop it. Yeah. So okay. So hopefully Spartan Capital is right, and we'll see a more bullish market this year. But if everything continues this way with inflation slowing, and the Fed being less aggressive, it looks at least like an encouraging data point. Still, I think we need to point out that rates are still going to be a lot higher than they ever were for crypto, ever.
Yeah.
So this is an environment that's been untested for this industry, for this asset class. So it's still kind of TBD how tokens react when there's not as much just free money sloshing around the economy. Maybe it means that crypto will be less volatile. Maybe there will be kind of we won't see these crazy bull runs and then crazy crashes anymore. I mean, who knows? But I think that's something to watch. Like, even if the bear market is coming to an end, it's still a different environment that we were in past bull runs. So
yeah,
I don't know if we'll see as big of a rally as we have before.
Yeah,
come on, bigger.
No. I think
ETH to 10K.
Go ahead. ETH to 10K. Yeah.
Ultrasound money, guys. Come on.
I don't know. I feel like everyone knows what crypto is now. Everyone has heard of Bitcoin. So it's just a different, I think everyone is going to be a little more wary. So I think it is, in addition to the rate environment, I think also just psychologically, I don't know. I think people are going to be more wary, and I think truly valuable projects are going to have to, have maybe a better chance of shining moving forward. So we'll see.
I mean, there's no dearth of speculators in the world, all right? Like, we had a whole generation that got burnt in 2018. So they say, oh, we're never touching this again. But in 2021, either they came back or new suckers came in, right? So, and now they're all gone, and they're like, we're never touching this again. So in the next run, we'll see another wave of people coming in, right? Because compared to the world's population, how many people use crypto, right? MetaMask has 30 million addresses? That's nothing.
Yeah, it's
right?
not nothing, man. It's
tiny. It's tiny.
Yeah.
Yeah.
In terms of like actual like penetration of the population, that's
Sure.
like literally close to zero.
Sure.
So I mean, there's so much room for actual adoption, but unfortunately, adoption usually comes when number goes up because that's when people want to get in, right? So yeah, I think it's going to be interesting because there's so many chains, so many alternate use cases coming up. Like DeFi specifically has been building through the bear, right?
Mhm.
We've been covering it. We've seen the projects that are kind of going to be coming out with new releases and things. So as long as broader markets aren't like taken to the woodshed, it should be a good year, I think.
I think that's a great point. I mean, it's true that we're in a different interest rate environment than we ever were before with crypto, but at the same time, there's still so much room to grow. I mean, adoption is still at 10% at the most in the countries where you have the most crypto adoption. So you're right. It's still tiny, which means there's a lot of room. And let's see. Somebody here in the chat is asking if we'll cover other stuff besides markets, and so that's maybe a cue to start with talking about our next topic, NFTs. And yeah, we'll go over NFTs and also the roll-up wars. And we were talking about the Ethereum upgrade before. So if you want to come back to the show later and look at that as well. But yeah, let's talk about this story. Owen, do you want to go for it?
Sure. So this guy, Panda Jackson, an Anon, dropped this on Twitter earlier this week, saying that basically Blur, which had been it's complicated. You guys got to help me a little bit, but like basically OpenSea back in November said if you as a NFT project didn't blacklist marketplaces which charged no fees, i.e. Blur, X2, Y2, Looks Rare, then they wouldn't enforce creator fees on their own platform. And OpenSea being where the majority of volume still happened at the time, like that's a big ask. So a lot of projects blacklisted Blur, and basically Blur has kind of been stuck, and they were taking huge amounts of market share from OpenSea. And then this week, what this guy Panda Jackson tweeted out was that Blur had actually, I think I called it a bit of business judo in my article. Like they used a protocol called Seaport, which OpenSea deployed to essentially be able to list the NFTs which had blacklisted their platform. And I mean, that's the basic thing. There's something which I still am not crystal clear on about, like, they're enforcing royalties on those NFTs, which they're accessing through Seaport. So, and I don't quite understand, because I was talking to Panda Jackson. He was saying conceivably you could use Seaport and not charge royalties. And I don't quite understand why a marketplace hasn't just used Seaport and is using that to bypass these blacklists. And I mean, even Panda Jackson, when we talked a bit, he said like that he thought that was a pretty obvious thing to do, and he expects someone to do it. I could be wrong on how these mechanics work, but that's my basic understanding. So it was yeah. I mean, it's interesting in terms of the royalty debate continues to rage on, and it's interesting to see. It's like a battle for part of like the soul of NFTs, which at their best are supposed to like help artists, independently make it and be able to make money when their NFTs are transferred. So yeah, I mean, we've been covering that saga, I feel like, since it started. So yeah, the next chapter, I'm not sure. I reached out to both Blur and OpenSea. Neither responded, and they both might be kind of scrambling in certain ways. So yeah, I don't know. I don't know what you thought of it, YYC, but interesting move. It's going to be interesting to see, like we covered a couple weeks ago, these people deployed this thing which allowed you to stake NFTs, and then that could potentially allow people to charge royalties. If you can convince your holders to stake, and that'll bring up a bunch of other use cases where maybe holders themselves will start to be able to get some of those royalty fees. So, I mean, again, it's tip of the iceberg in terms of experimentation, and but it's really fascinating to kind of to see that move and see one of like the main value propositions of NFTs. That battle play out in real time. So, yeah.
Yeah, I think what like a lot of projects did kind of promise, or rather at least talk about, a revenue sharing model with holders, right?
Right.
But then the main issue with something like that is you get into the realm of securities,
Yeah.
right? Because that's like direct
Yeah.
joint investment with the expectation of profit, etc. That clearly fails the Howey test, right? So,
Yeah.
which is why a lot of projects then backed out away from that. But speaking specifically about royalties, I think it's been, this whole cat and mouse game has been fascinating to watch as
Yeah.
someone who's deep into NFTs, because before Looks Rare and X2Y2, and long before Blur came along, right? OpenSea was basically the reigning champion. They collect their 2.5% fee on everything, enforce royalties, so artists were happy, everyone was happy, right? And then SudoSwap came along and was the first one to actually say, hey, you know what, we can't really enforce royalties on chain. It's not part of the ERC 721 standard. And we've just created an AMM for you guys to use, right? Low fees, 0.5%, and no royalties.
Yeah.
And that sparked this whole race for royalties, right? Because that, as soon as volume started moving to SudoSwap,
Yeah.
and creators started taking note, right? Because that's money straight out of their pocket, right? That's when the debate came up and said, oh, this is evil for the space, and it's terrible, etc. But as a trader, added liquidity is always great.
Yeah.
Right. And with on SudoSwap, you have instant liquidity. You can directly sell into the bid, or buy at the ask, and the spreads are much narrower than OpenSea. On OpenSea, you guys would have probably noticed, like, if the floor price of something is 1 ETH, the best offer would probably be like 0.6 or something. It's nowhere close to the actual floor normally.
Yeah.
So that's how it started. And then Blur launched, and of course they said they launched with zero fees and zero royalties, right? So it was like complete free for all.
Yeah.
And and then started eating OpenSea's lunch, because why would someone? Because think about it, with collections moving up their royalties to like 7.5%, 10%, 12.5% in some cases, plus OpenSea's fee, you're talking about like a 10 to 15% tax, if you want to call it that, just to buy every time you buy and sell something, which is crazy. That's a crazy amount of friction. And for active traders, that's like just a no. Right. So Blur was a godsend for people who are buying and flipping NFTs, because it took all that friction out. And then people who are buying on OpenSea also realized, hey, why should we pay extra? Right. Because then aggregators like Gem initially started picking up Blur listings, but I'm not sure if they still do. I haven't used it in a while. So and then there was pushback, and so Blur said, okay, we're going to enforce a minimum royalty, which is like 0.5% or something, so you can't reduce it below that. For collections that choose not to blacklist them or use OpenSea's enforcement tool, they said, all right, we'll support you guys with collecting royalties, and of course their airdrops also incentivize royalties. So if you pay full royalties, you get more of the airdrop or whatnot. Anyway, so that's how this whole thing came about, and now they've managed to sidestep the filter using this seaport integration. Right? So you can now list these previously blocked NFTs using Blur, but they've chosen to enforce royalties. I think that's a business decision that they took to kind of maybe reintegrate themselves into the community and like make nice with the artists. Right. Because now they plan to launch their token in a couple of weeks. I think Valentine's Day is when it's going to launch.
Yeah.
So yeah, they have to it's probably PR because it's a switch, right? Nothing stops them from changing that down the road.
Yeah. Yeah.
So-
Yeah. Yeah, it's interesting just seeing the copy of the two websites. I mean, I just noticed when I was writing this story of just like, OpenSea is very much about featuring the artists, and Blur advertises their speed for traders. And so I mean, they're obviously they're approaching the market very differently. So it's interesting to see their kind of philosophies compete.
Yeah, you need both, I think,
Yeah.
to have a healthy and flourishing market, right? Because when you have high volume in a collection, like something that mints and like immediately rockets up, OpenSea is not as quick or snappy enough if you want to be, sniping rare NFTs or something like that.
Yeah.
Other aggregators are much quicker, is at least what I've found.
Sure.
So I definitely missed this story. What I don't get is what was OpenSea filtering? I mean, what's kind of the thing that Blur using Seaport, like what are they trying to sidestep?
I'll give it a shot while I see, and then you can correct me. So OpenSea, they told projects, and YYC, please step in like the minute if I get anything wrong. Like they told projects, here is one tool that you can use. You can use other tools, but in order for us to collect royalties on your behalf, you need to block your project from trading on any other platform which doesn't support royalties.
So
I think it was a super smart.
You like the move, RC. I remember you said that.
Business move, because they said, "Oh, all right, we're not going to step into this debate. We're going to put this tool optional for everyone to use, right?" And okay, so basically, they went out and told everyone, if you're launching an NFT project and you want us to enforce royalties, block everyone else.
Yeah.
If you don't block everyone else, we won't enforce them either.
Okay, I see.
That's it. So it was kind of a catch-22, right? Because creators aren't going to give up royalties on OpenSea, which has like 90% market share. So they would rather give up the potential exposure they would have or additional sales on the other platforms.
Yeah.
So it's genius, I would say. And then, of course, like the counter move we've seen now with like this workaround from Blur.
Yeah.
I mean, hats off to them.
I'm
waiting to see what OpenSea does next.
Yeah.
Okay, so now this means that even for projects that decided to have this filter on, saying, okay, we rather have royalties on OpenSea and be blocked from other platforms, but this Seaport allows those projects to be listed on on Blur and other places, regardless.
Yeah.
I mean,
Okay.
the other places need to integrate Seaport as well. So far, it's just Blur. But the fun thing here is that the creators get their royalties through Blur. So the only one losing out essentially is OpenSea, because they don't get their 2.5%.
Yeah.
So Blur doesn't collect the fees, so they get credit for the volume. Artist gets the royalties, but OpenSea gets nothing.
Well, one thing that Panda Jackson did say is that that OpenSea might be able to monetize Seaport at some point in the future. I mean, we didn't get into the details of that, so maybe I don't know about the feasibility of that, but OpenSea might get a win, because I too read this development as OpenSea gets the short end of the stick, but maybe they, through adoption of Seaport, which I still don't understand why they did if they didn't intend to monetize it, maybe they stand to gain something in the future.
Well, yeah. I mean, Blur will be shoveling a ton of volume through Seaport. I mean, I'm guessing they'd become the top user by far, right?
Yeah.
So yeah, could be a marketing point for Seaport in the future, right? Saying, hey, it's done so much volume over the last year or whatever.
Yeah.
Because is Seaport was Seaport created by OpenSea?
Yeah.
Yes.
Now it's being used against it.
Yeah. It's business judo. It's crazy.
Okay, that's what you meant by that.
Yeah.
That's crazy. What do you guys think about the whole royalty debate? Like, should it be enforced? Like, should it be a requirement for NFT platforms?
You can go.
I think it depends, to be honest. Like some projects are deserving of royalties. I think like projects that come out with a free or very cheap mint and rely on royalties to kind of fund the project, I have no issue paying royalties for those. But there are some that like grifters basically who would come in with a high mint price, right?
Yeah.
So they've already raised enough as much as you need for the project from the mint alone, right? And for those kind of projects, 10%, 12% royalties make no sense. If you're having a 1 ETH mint, that's more than enough. You can generate value with that. You don't need to extort your community further through these royalties.
Yeah. Yeah.
But again, this is a very different topic from each. Everyone who's into NFTs will tell you differently. Some people will say, no, not at all. This is like, this is Web3, should be open, et cetera, et cetera. Creators obviously will be in favor of royalties, right?
Yeah.
So,
well, yeah, I mean, that's what makes it such an interesting debate. I do wonder if, like, I still think we're just kind of, maybe it's just like the first model. It's weird that the creator of a project gets paid when their NFT is sold. Like, part of me feels like that incentivizes, I don't know, like doesn't incentivize holding, which is kind of, I don't know.
This is exactly what we saw in 2021, 22, right? Create like, I won't call them shady, but smart, not smart either, because I don't respect the practice. But a lot of projects were essentially farming royalties by hyping up like upcoming announcements saying, oh, in a month we're going to do this. So people would buy it up, so they'd collect royalties, and then that announcement would be forgotten, and then people would dump, so they'd collect royalties again. And a few months later, they do it again, saying, "Oh, now this thing is coming out." So,
that's horrible.
Like,
and there's been a ton of this, in the space.
Yeah, I saw something. It was like, so I just think there are new models. I mean, it's a great question, Cami, because I think everyone has a different answer. But I think there could be new models. Like, maybe this has to deal with the security issue, but like that tool that Limit Break developed a couple weeks ago, like basically they suggested like you could say if someone holds an NFT for a year, they'll be able to have access to the royalties or something like that. So I just think there's a larger design space about, I don't know, the ways to maybe involve the community and maybe incentivize creators to, I don't know, not just royalty farm, as YYC pointed out.
Yeah, and this is a really good point from 69 Spell 69. Yes, until we have enforceable royalties on chain, if that happens, it's always going to be a cat and mouse game. Because especially in a bear market, NFT collectors don't have endless pockets either, right? Some do, like the whales, DC investor, etc. But for most of us, it's like scrambling to find the ETH for the next mint. So if like even that 2.5%, 3% adds up over time.
So it's just like a race to the bottom, right? Like if especially as competition increases between all the NFT marketplaces, it's just natural that they'll all start competing on where who offers a better price.
I still, maybe we're going too deep down the rabbit hole. Like I've talked to a couple people about it, but I still like cannot give a crystal clear explanation as to why royalties can't be enforced on the protocol layer. And that's probably something I need to write a couple more stories about. But it's just like, I mean, I don't know, if Ethereum is Turing complete, why can't you make that law into the smart contract? But anyways.
It's a good question.
Yeah.
Okay, maybe we should turn to our final topic for the day, which is the roll-up wars. We had a story on this by Sam, and it looks like this came out of a tweet by Off-Chain Labs co-founder. Off-Chain Labs is the team behind Arbitrum, and an optimistic roll-up. And so he's saying that there's a narrative out there that CK rollups, that zero knowledge rollups, will be able to do everything that optimistic rollups do, but better. And he says, he tweeted about why he thinks Arbitrum's technology is winning. So yeah, I guess the main, just like the backdrop for this story is the fight or the battle between all the scaling technologies and which will be the one to win out. And I think there's a question of whether there will be one scaling technology to rule them all. And I think there probably will be, because otherwise liquidity will be fragmented between so many different chains that it won't be very practical. So to me, it does make sense that in the long run, I think there has to be just like one or two, but just like very few layer twos that end up just getting most of the volume out there. And so the question is, which one? And it seems that we're coming to a consensus that it will be some sort of roll up. So this technology that like rolls up transactions in a bundle and then confirms them to the Ethereum main chain after they after most of these after all of these transactions happen off chain, so that just speeds up the transactions. But the question is, which of these rollups will win? So there's there are optimistic rollups and there's CK rollups, and yeah, there's different trade-offs in both of them. Yeah, I'm not super clear on exactly kind of the main differences between the two. I think there's some issues between how a complete kind of computation is on optimism versus zero knowledge rollups. There's also a difference in how long it takes to withdraw from optimism. I believe optimism takes longer to withdraw. But yeah, I don't know if you guys want to chime in with kind of the difference between the two and where we're at with this battle.
Yeah, I can. I didn't realize at the time that we had already written a story about Steven, but I interviewed him yesterday, and I think he kind of kicked that fight off. And the story isn't out yet, and we have extremely exclusive information about it. Anyways, I did talk to Steven, and I think they're working on things, as he said, to like extend the kind of the flexibility of Arbitrum, so that's going to come out on Tuesday. So stay tuned. What else I was going to say? Yeah, I'm not sure. Like, I don't know what he would think, because we talked a little bit about this, just kind of like the competition, and I don't know how people who are developing all these rollups, like how many rollups they feel is acceptable. Like DYDX, I think it depends on the application too. Like, I think there are probably some where like composability is super important and you want everyone to be on the same chain, but like maybe, like DYDX is doing their own chain because they're fairly isolated. So I think like there could be, there are these other people trying to get me to write a story about like, application specific rollups or like rollups as a service. So I think it's like, I think there'll be like a lot of different kind of configurations that end up happening.
Yeah, maybe for applications that don't need composability, there can be more than one or two solutions.
Yeah, or like maybe there'll be like just like a gaming ecosystem that like has their roll up and you join that thing, and maybe it's, I don't know, kind of optimized for that in some way or other.
Yeah, I mean, in terms of Ethereum, yes, I mean, we're talking about a few like layer twos, but there are so many different approaches being taken by other layer ones, right? Like Avalanche has its subnets. On Arbitrum, you have this whole magic treasure ecosystem. I mean, it's on the main chain, but it's kind of a world of its own.
Yeah.
And yeah, I, one thing I'd like to mention here is Atom has been really strong in the last month, because a lot of these chains are going to be Cosmos based, right? Because it lets you customize your particular chain for the performance and utility that you want, which is why DYDX chose that ecosystem to build their own
Yeah.
chain.
Yeah. 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 Cosmos was early to kind of seeing this. I don't know, kind of all these chains running in parallel. I feel like that architecture, I think they saw it earlier than most.
Yeah, I mean, Polkadot has a similar model too, right? But doesn't seem to have gained as much traction as Cosmos.
Yeah.
And I think maybe Terra and UST had a lot to do with that, right? Because that kind of brought a lot of eyes on Cosmos that hadn't really, probably hadn't explored it before.
Yeah.
And we haven't seen a mega Ponzi on Polkadot yet.
Yeah.
So
I
next cycle, right?
Yeah, I was so surprised, just like that, real quick, that developer report that came out of Electric Capital, like I think Maria Shen, I want to say, headed that up. But I think Polkadot, it said like Polkadot developers were like the second highest to Ethereum, second or third. Anyways, I was just like, I don't know, I was surprised. So maybe to take a closer look there.
Yeah, because I think Polkadot was super promising, but I don't think we've seen that much activity. It looks like, do you remember there was this big, was it a hack on Moonbeam? Am I remembering this correctly? Or I think like there was like
Akala. It was the Akala, the dollar that was like
yes, like
got minted out of control, right?
Yes,
I remember that.
Yeah.
And I think that took kind of the momentum, like it sold the momentum on DeFi on Polkadot.
Yeah.
Like I haven't seen much coming out of that ecosystem since then.
Yeah. It's hard not to be biased by Twitter. Someone had a great tweet. They were like, you can either build for crypto Twitter or you can build for the world. And sometimes I worry that I'm, just looking on Twitter and maybe Polkadot's popping off and I'm just, they're not on Twitter. So I don't know.
Maybe.
Yeah.
Something for us to dive into, definitely.
For sure.
Yeah.
For sure. But it looks like, looking at TVL on the different scaling solutions, and optimistic rollup is still leading the charge, right?
Yeah, I mean, we don't really have any functional ZK networks out there yet, except like Starknet, which is like permissioned and whatnot, right? So we haven't really seen any fully functional ZK EVM out yet, but Polygons is expected in the next 2 or 3 months, I believe. They're already in testnet. So, and Polygon's another one to mention. I mean, the token's up to what, $1.30, I think.
True.
Also performing really well. And this is one that like I've been bullish on through the bear market, just because like look at the power of their business development team.
Yeah.
Simply based on the partnerships that they've got with all the big Web2 companies. I'm like, why would these guys pick Polygon over everyone else?
Yeah.
Right?
Yeah. No, so, they have like, they've definitely carved out a great reputation for their biz dev work.
But what about CK Sync? Isn't that a functional CK rollup?
Testnet.
Oh, it's testnet.
Yeah. And I think they have like payments. I think you can like pay and maybe send. I think I've done something. I think
you can do Gitcoin grants and pay through ZK Sync. But that's again, I think, a sort of customish thing, right? So it's not like a general use chain. Yeah.
Okay, so it's like, Optimism is winning, but CK rollups haven't really entered the race yet.
Exactly. So we'll see Polygon ZK EVN, and then Binance is coming out with ZK BNB, and who else? I mean, Scroll, and a couple. Who else? I feel like I'm missing one big one.
You said Starkware already?
Yeah. Oh yeah, Starkware will come out with their mainnet launch.
They've raised a ton of money. They've raised hundreds of millions, I think.
Yeah. And we know there's a Stark token on the way, right? Because 3 Arrows lost out on some apparently.
Yeah.
Okay, so that'll be really kind of interesting trend to watch coming months. That the CK and the Optimism roll up battle. At
Yeah,
least like Optimism has had a head start, so
exactly. Both of them have, because there was really no competition in terms of layer 2 when they launched. Right. And it's interesting because just the other day I was when gas spiked to like 88 or 100 during some volatility, and there was a mint going on. People were complaining in that Discord, guys, $20 to mint. I was like, you don't remember 2021. We were spending 300, 500, $1,000 in gas just to grab these
Oh
JPEGs,
god.
right?
Yeah, $20 was nothing.
Yeah. So everyone's been spoiled by 2022 and like single digit Ethereum gas. But like we've seen, and we've said this many times, like ETH has become deflationary again, um, according to ultrasound money, right? And all it takes is a little bit of activity, one hot project, one hot mint.
Yeah.
So, and this is during a bear market when no one is on the chain, apparently, right? So, when the next cycle does kick off, these scaling solutions will be ready and willing, I hope, to take on the extra load.
Yeah.
That'll be a huge difference from the last bull market, having like working scaling solutions.
Yeah, and they're still trying to drop prices. So yeah, I mean, I think neither Arbitrum nor Optimism are like they're not happy with how low their prices are, and they're cents for a transfer.
Yeah.
So.
Yeah. So I think this concludes our weekly recap. Super interesting stuff, guys. I feel like I'm all caught up now, ready to fully go back into the daily grind of DeFi. Not really a grind, more like a roller coaster, even in the bear market. So yeah, I mean, anything else that we should add that you think is interesting that happened this week, or we can start wrapping up?
I could just I just like a couple of stories that I wrote. I can summarize them in a couple of sentences. Just I talked to someone at Maker, and their Olympus DAO is depositing 77 million in Maker DAO's DAI savings rate, which is paid for through Maker's revenue. So they're getting only 1%, but it's interesting that Olympus DAO chose to put 77 million into Maker DAO despite that low rate. So and I still am like, why don't you deposit in euro? And I still don't quite understand, but I think it's like very, very, very low risk, and it's just an interesting kind of plug and play to get that extra 1% that Maker is willing to subsidize. I think to increase the value of DAI. I'm not sure why Maker did it, but anyways, they might integrate with Compound too, so you get an extra % on your DAI, because you can just kind of jump in and out of that on the back end. So that happened. Gains Network is kind of a GMX competitor, and they hit an all-time high price-wise, I think, this week. They launched on Arbitrum and have benefited a lot from that. And it's interesting because they have commodities and commodities and stocks on there. And I kind of thought that was dead in the water, but I talked to one guy there, and he said, yeah, like they're fairly decentralized, so they feel like they can continue to offer those derivatives.
And you can trade those even in the US?
I believe so. I don't think they have any country restrictions.
Wow.
So I was surprised by that. Yeah. I know. 100x leverage too. So.
Wow. Okay. I hope Gary Gensler's not listening. All right. Nice. Cool. All right. Well, we see anything to add?
No, I think we've covered everything. Optimism, Canto, Synapse, Magic. These are the best performers so far this month. And if the trend continues, I mean, we'd expect to see more layer ones pop up, I guess. And then we'll see the usual rotation from one to the next, right? The hot ball of money keeps moving.
Mm-hmm.
So I'm hearing things about something called Bera Chain.
Oh boy.
Not exactly sure what that is, but we'll need to look into it. I don't want to miss out like Canto, right? So got to get in and position.
Oh Lord.
We're already back to FOMOing. Oh, okay. Maybe we are back in the bull market.
No, I stopped once I wrote about modular blockchains. I was like, we don't need all these layer ones anymore. We're fine, guys. Anyways.
Nice.
I mean, NFTs have had a great month, and in terms of volumes have been good. Prices have been solid across the board. A lot of successful launches too.
Cool.
A lot of it might have to do with the Blur airdrop, because right now the final round of the airdrop incentivizes bidding on the platform, and the closer to the floor price that your bid is, the more tokens you'd potentially get. So basically, you're setting yourself up as exit liquidity if you're farming the airdrop, right? Because you bid, someone comes and dumps their NFT on you. Okay, you get the tokens, but you're also stuck with the NFT.
Right.
Oh, interesting.
Right. So I've taken advantage a lot. Let's just leave it at that. I cleaned up my wallet a lot over the last month.
So you're preparing for the airdrop?
No, I took advantage of the farmers. I said,
oh, I see. Okay.
You're selling into that.
Yeah. I'm like, oh, you want to bid this much for this old garbage? Take the JPEG. No worries.
Nice. Okay. Well, maybe you'll be missing out on those tokens, or are you playing both?
I mean, I got some like care packages or whatever for all my trading in 2022, because the first couple of rounds was geared to people who were stuck around during the bear apparently. So clearly I did, and wasted a lot of ETH on worthless JPEGs. So I'm sure I'll get some tokens, but not a lot compared to everyone who's been like farming it on an industrial scale. But again, with so many tokens coming out, I really don't see what the value prop is going to be, because who's going to buy the token? Because if Blur collects no fees, so there's no like potential to stake it to like earn fees like you had with Looks, right? That was like the main draw for Looks. People were buying it to stake and earn like the ETH from trading fees, right? So until they announce like what the tokenomics would look like and the utility for the token, I can just see like people just claiming and dumping like they do with most airdrops. Yeah,
it's crazy that people will like farm a potential airdrop without knowing the tokenomics. Like how do you know what the token will do?
I mean, we never know, right? Even like most of our airdrop farming is speculative. Like we go on these random chains, test nets, and do random activities in the hopes that we get something that's worth something. And sometimes it works out, sometimes it's like a dud. So
I don't get it.
Journey. Oh my god.
Okay. It's good that we have this like mix of risk appetites here in this panel, because like I wouldn't get it. Okay. I think that's a good place to end today's recap. Guys, it's great to be back, and thanks everyone who joined and listened in. Please feel free to share with your friends and tell them about the Defiant, and hope to see you next week here for another recap.
Thanks for your comments, guys.
Yeah, thanks everyone for chiming in. A lot of great insights today.
Yeah, appreciate it.
And see you next week.
See you next week.
Bye.